Ladies and gentlemen, good day and welcome to TCPL Packaging Limited Q3 FY21 earnings conference call hosted by Systematix Institutional Equities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankit Gore from Systematix. Thank you, and over to you, sir.
Thank you, Nirav. Good morning, everyone. On behalf of Systematix, I welcome everyone on the call of TCPL Packaging to discuss Q3 FY21 earnings. On the call, we have Mr. Saket Kanoria, who is the Managing Director of TCPL Packaging. Without taking much time, I would like to hand over call to Mr. Saket Kanoria for his opening remarks, after which we can have a Q&A session. Over to you, Kanoria ji. Thank you.
Thank you, Ankit. It's a pleasure to host the call along with my son Akshay, who's the Executive Director, and Mr. Dave, who's our General Manager of Finance. So welcome everybody and thank you so much for your time. We are pleased to meet you all here today virtually, and also we are very pleased to announce our results for the quarter ended December 2020. When we met last, it was end of July when the COVID was raging, and as you may have noticed, at the end of the first quarter this year, the company had a revenue which was 21% lower than the previous year. But now, after 3 quarters of performance, we have narrowed that gap down, and year to date we are minus 2.7%, which we are quite happy about. And we expect by the end of the year to make up this gap and have a small growth in this year. We've been fortunate to be in the packaging business, which was allowed to reopen pretty soon, after the lockdown, because we were supplying to essential services. And overall, the market has been quite positive since then. Though we have seen a drop in demand post-Diwali this time, but we expect now things are picking up because there has been a very big inventory correction at our customers' end. So overall, I would say that we're pleased and fortunate that our performance has been pretty much up to our mark. And in fact, on 22nd March, if somebody had asked me that on around this time would be in this position, I would never expect to be in this position. The other thing which you may have noticed is the increase in margins, in the current year. So last year, that is 19-20, our margin had improved over the previous year, and that trend continues into this year as well. If you notice, the EBITDA margin of the company in this 31st December quarter has gone up to 16.25%. In September, it was 15.8%, and in June, it was 14.3%, whereas whole of last year, it was 14.7%, which was over 13.2 in the previous year. So this increase in margin has been very, very heartwarming. The only thing we have suffered is a little bit of higher tax spend due to less capitalization during the current year. But, overall, if we can maintain this higher margin, then it obviously stands us in good stead in the long term. So I would now request you all to ask questions and make it as interactive as possible. And I guess, there will be a lot of questions which will be common, so I can then take those. So over to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and one. The first question is from the line of Kunal Sabnis from VEC Investments. Please go ahead.
Hello, sir. Thanks a lot for the opportunity and congrats on a great set of numbers. Sir, I have three questions. Firstly, on the gross margin. Sir, as you mentioned that our margins have been better YOY, and gross margins have been pretty stable in the 43-44% range, which is pretty good. What I wanted to understand was what has driven or maintained this at the current level, considering there was some raw material improvement. If you could throw some light on that, plus if you could say if we are able to pass on and what would be the expectation going ahead. The second question is on the other costs. As was expected in the lockdown that certain costs were lower. Is the catch up completely through, or do we expect some catch up still to be done in quarter four? And finally, on the revenue, if you could just give a sense on as you mentioned that this year you will close a little higher than last year. If you could give some sense of the following year, what should we expect? Thanks a lot.
All right, thank you, Kunal. So you're right. You know, the raw material price has been soft in the first half of the year. We are seeing it increase now in this third quarter and more so in the fourth quarter. A lot of the increases that have happened have already been passed on, and some are yet to be passed on. So there will be a little bit of lag, and that impact we may see in this last quarter. But we expect this raw material pricing to stabilize around March, April, and then we should get a benefit of the lag at that point of time. So it will kind of neutralize, I think, over the next 6 months. The other point was on the other cost as well. So, you know, yes, in the lockdown, a lot of costs were curtailed, but also revenue was curtailed. And in, I think, quarter three played itself out. I don't see any significant change in overall overhead costs going forward as opposed to what we did in quarter three. So I think from a margin perspective, that should not be much of a factor. And revenue next year, we expect quite a growth, a significant growth, well into the double digits on revenue side, because we have the capacity now, and we are doing revenue at 80 crores monthly rate as a bare minimum. So we hope to cross revenue of 1,000 crores for sure in the coming year.
Great, thanks a lot. Just the extension of the third question on growth. Any sectoral skew do you see going forward to fund this double-digit growth? I mean, any particular industries that will drive this?
No, Akshay, you can answer this.
Hi, Kunal. So on the sector thing, basically, there's a lot of low-hanging fruit we see because this year's performance in certain sectors has been very poor. You know, like very discretionary spending, higher value item spending, Diwali gifting, all of these things were quite subdued in this year. You know, even post the first quarter when things started to pick up and open up, still a lot of the very discretionary kind of spending was quite subdued, and that is really what has held back our growth this year. So even if that comes back to 2019 levels and no growth on 2019 levels in those kind of areas, that itself will drive a lot of the growth for 2021. So a lot of mean reversion yet to take place, which will help the growth. And secondly, we have done some capex prior to COVID. So those capacities will also kick in and benefit us. And overall, the FMCG market seems to be growing now. So as long as the volume growth is reasonable, we should also grow to that extent, or if not more.
Great. Thanks a lot and wish you luck.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Vipul Shah from RW Equities. Please go ahead.
Yeah, hello. I just wanted to know what would be the capacity utilization in this quarter. And in one of the earlier calls, we had mentioned our new film line will be operationalized by February 21. I mean, obviously this was pre-COVID, but where are we in terms of, the new film line?
All right, thank you. Capacity utilization in the quarter, we would expect it to be around 80%. And the film line we had postponed due to construction being stopped. So now we are expecting it to start around August or latest by September in the current year.
All right, thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Rahul Soni from SMIFS Limited. Please go ahead.
Hello. Yeah, thanks for giving me an opportunity to ask the question. So, two questions from my side. One thing I want to understand, how is your revenue concentration among your clients? And secondly, what kind of volume growth you are expecting for the next financial year?
So the revenue split is not something which we declare, but essentially I would say that it is almost all the segments are now growing. So the share of business of any particular segment has not witnessed any change as such. It's marginal 1 or 2% here or there. And volume growth we expect next year to be at least over 10%. Which would lead to a revenue growth of 15-16%.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen.
Sir, my question, Ankit here. My question with regards to the increased paper prices. How easy or how difficult for us to pass on those prices to our customer, and how our paper pricing are reacting now, and if you give some sense on outlook as well.
Yeah, that's a very good question. Basically, the fortunate thing is that the paperboard prices have gone up too much too soon. So all the packaging companies are affected by it, and therefore nobody has the capacity to bear this, and hence the price increase with customers is going through reasonably smoothly. So we expect to pass the whole thing on, and one of the reasons why this pricing has been so volatile this time is the demand from China, then waste paper collection in the world which has been messed up due to COVID, and also shipping rates. So we expect that all these things to normalize in the next few months. So let's say from April onwards, we think that the pricing will start going down, though it may not get to pre-COVID level, but certainly lower than what they are now. So then, things will become easier at that point of time, because especially kraft paper, which is used for corrugation, there the pricing has really gone very, very high. And that is mainly due to lack of waste paper for the kraft mills. And things are getting normalized because the cycle is now changing. But again, Europe is in a lockdown. US is coming out of it though. So this has to stabilize, but we still expect that things will only get better going forward.
Okay. Thank you very much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
जी नमस्कार सर, धन्यवाद for the opportunity. Sir, firstly, sir, as we are conducting these conference call to educate investors and the analyst community, I could not found an investor presentation along with the invite being uploaded at your site or at the exchanges. So correct me if any of thing that is available, and or what would request for the same going forward, so that things which you are explaining us could be elaborated and articulated much better way in a PPT presentation also, sir.
Haji, namaskar. Thank you very much. I think your suggestion is really a good one and makes a lot of sense. So we will certainly consider doing it from the next time.
Yes, sir. And including that, yes, sir. You were telling something, sir? Hello?
No, continue.
Yes, sir. And including that with a corporate video explaining the processes and the scope of work also, because your verticals which we are able to observe from your website do speak about this BAT being a key player, being a key customer of yours, sir. So, sir, as you have told that the corrugated sheet prices were higher and the raw material, therefore the raw material prices were higher. If you could explain us, sir, what constitute our raw material basket and which are our key suppliers, sir?
I'm sorry, which customer you talked about?
BAT, I think so, sir. For the cigarette player you have mentioned on your website, the tobacco packaging, folding cartoons and flexible packaging. I'm referring to your website.
Okay.
तो सर स्कोप ऑफ वर्क समझना चाहते थे सर एंड आप रॉ मटेरियल बास्केट के बारे में थोड़ा और एक्सप्लेन करें सर.
So we have two basic verticals. One is paperboard packaging, which is paperboard cartons, and the other is flexible packaging, which is film-based laminates. So in paperboard carton, the key raw material is paperboard, coated paperboard, and kraft paper. Whereas in film-based laminate, the key raw material is polyester film, aluminium foil, and also some paper, thinner gauge paper. The raw materials generally tend to be anywhere between 50 and 60% of the product price, and the main raw material, which is paper in case of carton and film in case of laminate, is obviously 80% of the cost. The rest is inks, adhesive, foils, etc. So I hope that answers your question.
Sir, everything is sourced out, or we have any vertical integration?
No, everything is sourced out.
Everything is sourced out. So we are only acting as a converter then?
Yes, we are acting as a converter, and that's the case with almost every packaging company. You would generally packaging companies will source base raw material, which is more like a commodity product, and then they would print and do value additions and make the packaging out of it. You will rarely see a packaging company which makes paper, for example. I think apart from ITC, who have their own in-house packaging division and paperboard making division, there is no other paper mill which has carton making division. As far as film is concerned, Uflex makes the polyester film, and they also do the laminate, so they are integrated, but there is no other flexible packaging player who does both. So it's very rare that you would be in downstream as well.
Okay. And in the film, it is the BOPP films that are
BOPP and polyester, and also PE film. And that PE film is something we are setting up. So ultimately, we will be able to make our own film from granules, and then we will be able to print and supply the finished product. So there we will get more integrated in the years to come.
Okay, sir. On the capex front, sir, if you could throw some more light, what kind of capex have we done over the last few years, and what is in the pipeline, and how margin accretive are these capex going to be as per your understanding?
So capex this year has been quite low because again of the pandemic. In the first half there was not that much capex. So I would say that we are expecting to end the year with a total capex of not more than 55 crore. Next year it will be higher, maybe about 80 crore. So this is well within our means, and therefore the total debt will in fact see a decline in the current year. Next year it should be pretty much the same level or slightly lower. And I didn't understand margin accretive, the capex.
Sir, yes, sir. Whatever capex we are doing, we must be. Sir,
Yeah.
please continue, sir.
Yeah, we are setting up this capex which we have planned in the current and next year are in the existing plants. So there is no greenfield investment as such, and hence the ratio of its revenue to the capex being done is quite favorable. It's when you set up greenfield that the capex goes up very significantly.
It is more and more machines that we are installing. That is what the capex is on.
Yes, more and more machines.
Right, sir. And over the last few years, I mean, if we take 2016 or 17 onward, how much has the capex being done, sir? And everything is commercialized or something, or we have something in the capital work in progress?
No, I mean, let's say from the year 16, let's say from, if we take 16, 17, 18, we've done about 175 crores in 4 years. 175, 180 crore, and everything is commercialized. There's nothing capitalized. I mean, nothing pending to commercialize.
Okay, sir. And on a top line of 870 crore for the last financial year, which was last quarter was maybe affected with COVID, this is what the optimum level we are operating. When I wanted to understand the top line.
The other gentleman that we were at 80% capacity utilization roughly. So in our current capacity itself, we can do more than 1,000 crore, but business is becoming a little seasonal also. So the quarter before Diwali generally sees a bigger revenue than other quarters. So you can't run at 100% all the time. So there has to be a little bit of lag. But yes, we do have some headroom in our existing capacity. And it also depends a lot on product mix. Because you may produce a more valuable product, less valuable product. So it's very difficult to say that how much maximum you can do.
And sir, on the depth part.
Sorry to interrupt you.
Yeah. I'll come in the queue, sir. No, not to mention also. Thank you.
Thank you. The next question is from the line of Nitesh Jain from Aditya Birla Sun Life Mutual Fund. Please go ahead.
Good morning, Mr. Kanoria. Good morning, Akshay.
Morning.
Good set of numbers, and looking at 9 months, almost flattish revenue itself is a good achievement, I would say. My question is, sir, I have two questions rather. One is on the industry side. So if I look at this year, has TCPL grown faster than your competition, your 3-4 organized people as well as the entire industry? This is point number one. I don't want any quantification, but directionally you would definitely know that whether you have done better than the industry or not. This is point number one. And point number two is the company always had a 25% dividend payment policy, but last year due to COVID, you paid only 4 rupees dividend. But assuming now COVID is behind and things are looking up, and say a company delivers 35 rupees EPS, will we go back to 25% and can we expect 8.5, 9 rupees type of dividend per share this year? These are my two questions, please.
Yeah, thank you, Nitesh. So directionally, I would say that we have done best of our understanding in the paperboard carton space better than the industry. We started off quite quickly during the lockdown, in fact, and customers also perceived that we are more reliable, and hence we even gained market share. So definitely, I would say that we've done better from the understanding we have. Top line, we are almost flat. I think very few our competitor would be in the similar range. So I think there's a 7-8% gap. Certainly. As far as the laminates are concerned, we are a small player, so I wouldn't say the same thing there, though that division has also grown, but so have the bigger boys in the industry. But I think we've kept pace over there because we also have a limited capacity there. As far as dividend policy is concerned, our policy has always been to pay 20%. And we have been doing that consistently. This year was a little lower, you're right, but going forward we will continue with that policy. There is no rethinking on that at all.
Fantastic, sir. And can I ask one more question? Basically, what is the net debt? Is it 31st December, I mean the quarter end, versus the March number? Basically, I want to see how much the net debt has gone up. Net debt is basically your total debt, long-term plus working capital minus any cash on the books. Mr. Dave can help me with this.
So the long-term debt is a little lower than the opening number. On 1st April it was 195. On 31st December it was 183. Okay. So it has gone down by 12 CR. And the working capital has stayed pretty much the same.
Fair enough. And so lastly, we have seen continuous, improvement, which is a good thing in terms of the EBITDA margin you mentioned in the opening remarks as well. Now, the question here is, I want to see what is basically the genesis of this margin expansion. Would you say that is it only because of this lower raw material prices, or you think that on the cost side, structurally, the management has done something tremendously good in terms of pricing as well as on the fixed costs also, so that these margins are sustainable? This is my last question. Thank you very much.
Thank you. So it's a mixture of various things. One is raw material cost. The other is job mix. And the third is reduction in the cost base also. COVID has taught us a lot to be more efficient. In terms of number of employees, also it has gone down. So I think it's a mixture. I can't say that it is one thing. But as I mentioned earlier in the call, the third quarter, we've done what we had to do. So even in third quarter, the margin is higher. So it's there it's not about the cost overhead, but it's more about the raw material and the job mix. So certainly it is, I would say we are more efficient today than we were 1 year ago.
Wonderful. Thank you very much and really appreciate, sir, your answer.
Thank you.
Thank you. The next question is from the line of Bharat Seth from Lux Capital. Please go ahead.
Yeah, sir. Thanks for the opportunity and congrats on the steady set of numbers. I have a couple of questions. One is that you just mentioned that you have done approximately around 170 odd crore capex in the last 3-4 years, and you have a 80 crore capex guidance for the next year as well. So the thing is that what is this capex? This next year 80 crore capex is in which plant, and it's basically brownfield or greenfield. That's number one. Number two is that I've seen that we have a lot of repayments coming up from 2021 onwards, 21, 22. Some of our term loans are maturing. And I've also seen that recently there was a release by you to the exchanges that ICRA has withdrawn the rating based on company's request. So what is the rationale of withdrawing that rating request? And I have a thinking that our entire capex is being funded by the debt. So what's the guidance on that going ahead? Are you planning to reduce the debt going ahead? And how the things are going to look like next couple of years going ahead? Thank you very much.
Yes, thank you. So this 80 crore next year largely is in the flexible packaging space and some extent in the carton. And the repayment schedule over the next few years is not something we are perturbed about. I think it's well within our earnings. Okay. And it's pretty much the similar levels in the current year and the previous year. And your question on the credit rating, so we have been rated by a new agency this time, CRISIL, versus ICRA, and therefore ICRA has removed and we have got a better rating. In fact, by CRISIL. It's one notch higher than what it was earlier.
Okay.
Yes.
Okay. And since you have done so much of capex in last 3-4 years, and you are continuing with that in the next year as well, so is there any? I'm sure that this should translate into a good revenue top line growth going ahead. So if you can give some long term, I'm not asking for next year, but if you can see where you can see your top line in the next 2-3 years. And is the strategy, the another question is on the strategy, are you going to continue with the same kind of capex in your existing field? Do you foresee so much of demand going ahead, and how's the strategy and vision of the company for the next 2-3 years?
No, so we have already outlined that in previous calls and also in the board report that our cash earning, the capex is not higher than that. In fact, in the current year, the capex is much lower than the actual in cash. So even going forward, we hope to continue the same trend so that there is saving in the balance sheet, either staying in cash or in some other way. But essentially, we don't foresee any increase, of any significance in debt ratios. Yeah, or the ratio will keep improving day by day in terms of current ratio or equity debt ratio, which is, the debt equity even today is very comfortable. So I hope that answers your question.
Sure. And any guidance on the top line for the next 2-3 years?
Yeah, so next year I already mentioned, and historically the company has been growing around anywhere between 15 and 18% annually, and our CAGR has been somewhat similar. So our target is always to get to that level of annual growth, but of course it depends on so many factors. But double-digit growth to maintain, I'm sure, is something which we should be able to achieve.
Thank you very much, sir.
Thank you. The next question is from the line of Jay Shroff from Fast Capital. Please go ahead.
Good morning, Mr. Kanoria, and congrats on good set of numbers. I had a couple of questions. First, on the export side, I think last con call you had mentioned that while domestic had suffered in calendar of 20, exports had done pretty well. So what is the trend there, and how do you see that going ahead? And second is in terms of industry consolidation. So we have a lot of competition from maybe small and unorganized players. So due to this COVID, are we seeing some amount of consolidation which is helping the organized then?
Yeah, thank you. Yes, export was what sustained us actually in the first quarter. And even now this year has been pretty good from an export perspective. The rate of growth in export is higher than domestic. And whether that will remain forever, I'm not sure, but export is here to stay, and it should do quite well long term. Lot of multinational companies are looking at sourcing from India, or certainly they're exploring sourcing from India. So, overall it should be okay. Only currently the problem is the international shipping delays, and the freight has gone up very high. So temporarily, export is not much better margin perspective than domestic. But otherwise, it's a big focus area for us. And industry consolidation during COVID, of course, some companies have really suffered a lot in terms of their cash flow, etc. So we do expect, the weaker companies to look at merging with the stronger companies and all, and that will happen. But let's say in the last 9-10 months, we haven't really heard of anything that happened as such. So it takes time, but I guess in the medium to long run, it will start. The industry will see a lot of this.
No, so my question was primarily, so competitive intensity remains the same. or has it reduced?
Competition intensity, I would say, is pretty much the same.
Okay. Just one more on this. So if competitive intensity remains the same, and you're saying that, of late, your raw material prices have actually increased quite sharply. So could we actually see some hit on margins, at least in near term, let's say another 6 months or so?
So I think right now the raw material prices have gone up significantly. I mentioned earlier that we have been able to pass on most of it. So I don't think the margin is getting hit so much right now, but maybe temporarily it could get hit a little bit and then we make it up again. But it depends on how long it plays out in general. But it's not only due to competitor, because they are also suffering the same impact on raw material. So this time it's not so much about the pricing to customers is, because the raw material shot up sharply, so which has corrected itself. But yes, I mean, end of the day, that we have to be prepared for a small reduction in margin.
Okay. So we are not going to visit or revisit the situation that happened in 2018 or, where there was a continuous increase in price and...
Because that was after that demonetized and then GST, it was a real disaster. So,
right.
Yeah, I mean, I don't expect that to happen again.
All right. Thank you so much and all the best.
Thank you. The next question is from the line of Vipul Shah from RW Equities. Please go ahead.
Yeah, thank you again for the follow-up. So just wanted to know when do we expect to move to the new tax rate? Because primarily from the reading of the annual report, it appears that we have some MAT credit pending, which is why the company has decided to continue with the existing tax regime and not opt for the new. So, yeah, any guidance about the tax rate going forward also would really help, sir.
Yeah, so this current year we had a MAT credit, and after adjusting that MAT credit, we have to see at the end of this quarter what it comes to. But right now, it probably makes sense to move to the new rate, even in the current year. Because our capex this year was not as much as we expected to do, and going forward we have to plot our capex next year and then decide. But if not this year, then certainly I think from next year we'll move to the new regime. Unless we really step up capex, it won't make sense to stay on old regime. And also the backward area benefits of one of our plant in Haridwar has just finished, and though Guwahati continues, but it's a small plant, so uska impact is not so much. So we expect that by next year we will move to new regime, if not this year. Depends on how well we do in the current quarter, and accordingly we will have to decide.
Thank you, sir.
Thank you. The next question is from the line of Ketan Sabla from JM Financial Services. Please go ahead.
Hi, good morning. I just had a question around the raw material price hike. So just wanted to understand what is the lag time to pass on these price hikes to the customers. And are we seeing, you mentioned that you've been able to do that in certain cases, but if the raw material price hike stays on for a longer period of time, do we anticipate any pushbacks from them?
So generally the lag time at the maximum is 1 quarter, and once they've declared the increase, then there's not much any pushback, unless of course there's a further increase in raw material. But thankfully now the raw material peak increases have played itself out. I don't think that it will further rise in the coming weeks or months.
Sure.
So, yeah, the lag is always there for a quarter or so.
Yeah. And I had another question. You mentioned that, given the COVID environment, there has been some market share expansion from the unorganized sector to the organized folding carton players. Do you have any plans to do any bolt-on opportunities to consolidate our market position, especially from the perspective of maybe adding new customers or strengthening presence in certain sectors where we may not be as strong as some of the other competition?
So we are absolutely open mind, and if any opportunity comes along, we would like to explore for sure. But as of now, there is no specific lead that we are really following immediately. But yeah, it could happen anytime.
Sure. Thank you.
Thank you. The next question is from the line of Ridhima Chandak from Roha Asset Managers. Please go ahead.
Good morning, sir. Thank you for the opportunity. My three questions. So what is our total current capacity, and after increase, how much it would be?
So I would say that we can do revenue of about 100 crores in current capacity every month. That's if everything is at peak, which is not real life. And after increase, we'll add another 100 crores thereabouts. So
okay.
Yeah.
So if you quantify, like, what is total capacity in tons?
Tons is very difficult to say because it depends on too many factors. So, in our industry, it's not easy to quantify this volume as such. The unit is a totally different unit, and hence it depends. You can make a carton of 300 grams. You can also make at 500 grams. So your product mix determines how much ton you end up doing. So I would say that overall, I would say that in terms of value, we are doing about 900 crores. In the current capacity, we can technically go up to 1200, and in future, with a planned capacity expansion next year, we could do 1300, 1350. So you can consider it like that.
Okay, so means you said that after increment of this capacity, you can do another 100 crore per month, right? So in what
No,
time?
not 100 crore per month, 100 crore in a year.
Okay.
Next 100 months of it will double.
Yeah. In 100 crore capex, how will double?
Yeah. Okay. So this increased capacity would be fully utilized in what time period you are expecting?
By September this year.
Okay, September. So can you give any sequential or YOY volume numbers? Is it?
As I mentioned, this volume is kind of misleading figure. So, that I don't have any specific number to share on that.
Okay, sir.
Thank you.
Thank you so much.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, sir, Dhanyavad again, sir. So as you told that the capex which will be culminating going forward will add a top line of 100 crore only?
Yes.
Okay, then the conversion means that 80 crore capex will add a top line of 100 crore. That is what?
Yes. This time it will, because there's it's a pretty capital intensive capex. So, I mean, in the immediate future, we see that. But ultimately, it will depend again on that product mix. And therefore, it can increase further than that.
Right, sir. Sir, you spoke about this debt being, the long-term debt being lower by 12 crore. What is our, sir, cost of fund with this rating revision from CRISIL? One notch up. What is our long-term cost and working capital requirement? Maybe क्या rate है, sir?
So long-term is roughly 8.75% on an average, 8.79. Some of the older loans could be even up to 10. Some of the newer loans are even at low at 8.
Blended cost is 8. Yeah.
Haji?
ब्लेंडेड कॉस्ट आपने बताया 8.79.
हाँ 8.75 और जो वर्किंग कैपिटल 8.3 yeah 8.5 to 9%.
Okay. And sir, how much is total sales का export कितना है? Export constitute what percentage?
About 15%.
About 50. And any geographies which we are catering to specifically?
No, nothing like that. We are exporting to a lot of countries around the world.
Okay, sir. And sir, how is technology may act or will act as a disruptor going forward in the packaging industry, and what sort of amount you are spending on the R&D? And if you could give us a peer comparison, the nearest competitor, where as market share आपने नहीं बताया था, if market share also if you can give, and the peer comparison.
Hey, R&D में our spend is more towards design of carton and changing ideas and shapes and all. It's not about technology so much, except now with this film plant which is coming is a lot of new technology, but the R&D in process know-how is generally provided by the machine supplier or the technology supplier. So that's the reality. And what was the other question?
R&D you have quoted. I was looking at
share ऐसा नहीं है idea because it's a fragmented market, but I mean we have gained some share. That's all I can say.
Okay, sir. And out of the employee cost, sir, what is the percentage of remuneration that goes to the promoter team, sir?
That you see in the balance. I don't have that number here. It's not such a high percentage. Let me tell you that.
Okay, very very true, sir. And last point is on, sir, this printing part that involves the barcoding printing lines also. So we are only sourcing the printer along with the ink, or that also constitute in your department in this printing aspect?
So if we are talking of printing some QR code or some variable code, the customer provides the file and we have a software in which we can fill and we can print separate barcodes or QR codes as per requirement of customer to make it unique.
Okay.
But otherwise,
printers,
barcode is not something. I mean, I don't know what you mean by that.
Sir, I only wanted to know that in the packaging part, when the packets are completed, the printing part has also to be done. That printing is being done by you, and if that being done, then the printers and the lines are separate. I wanted to understand that scope of work is also
essential.
Hello, sir.
Hi. Just to clarify, I think there's a little confusion. Basically, we are buying paperboard and film as a raw material bare, and then we are adding value to it in terms of the print and decoration, etc., that you see or when you buy a box on the shelf. And certain things like the MRP and those kind of things are usually printed on the customer's line at the time of packing, like the PKD and the expiry. So I hope that answers your question.
Okay, so the printing part is not there at our end, sir. That
not
is what.
That printing, but the rest of it is done by us.
Okay, sir. And if you could give a sector-wise percentage also, sir, how much is from the consumer FMCG part, how much is from the cigarette part, if that understanding?
We don't usually give sector-wise breakup because we don't share that information. But we can say that FMCG is our largest sector, and historically has been the more fast-growing one.
Thank you very much. Sorry to interrupt you, Mr. Kapoor. Due to time constraint, that will be the last question for today. I will now hand the conference over to Mr. Ankit Kaur for closing comments.
Thank you, Saket ji and Akshay. Thank you for your time and patiently answering all the questions. Any conclusive remark? I'd like to hand over call to Mr. Saket for that. Thank you very much, sir.
Yeah, thank you for organizing the call. We are very happy to meet some of our investors and prospective investors, and good suggestions have come which we will act upon in the future. And overall, I think there's optimism in general in the economy, and we we're quite happy with the way things are, and with the vaccination about to commence in the general public, hopefully this pandemic and COVID are behind us and we can get back to normalcy pretty soon. So thank you everybody for your time.
Thank you very much. On behalf of Systematics Institutional Equities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.